Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
All right, back here on the Investor Coaching Show, Paul Winkler, Evan Barnard. Okay, so we talk a lot. There are certain topics that just have to keep coming back up because we have people that are new in tuning in every week, and I just can't let people do stuff that is dysfunctional.
Hey, it's like Easter and Christmas service. You know?
That's right. We got.
You know how the story ends, but you're still showing up.
That's right. So there was an article in the Wall Street Journal today. It was today. No, it wasn't today. It was. Man, I guess I just missed this. It was gold hasn't. It was recent. Gold hasn't rallied this much since 1979. Was the title of the of this article.
Well, at least they didn't just go back like 9 months and make it sound like a big deal.
That's true. Okay,
it hasn't grown this fast for a year.
Yeah. Okay. So there's a price size of this. Okay. So gold hasn't rallied this much since 1979. Well, you know. It's 1979, just for those of you that don't know the history a whole lot, was the beginning of the end for gold. Because that was literally when you started to see that gold just come crashing down. So I think it's ironic, as talking about it hasn't rallied this much since 1979. What happened after that, it wasn't so pretty. Because remember, it was Reagan, right, coming in, and things actually were very uncertain back in the Carter era.
Yeah, and Volcker was going to start raising rates.
Yeah, raising rates, and that was going to destroy the economy, and that's a pretty negative step. But anyway, the circumstance is a little bit different right now. But it says here that gold has surged about 39% since of this year so far, which is interesting because, you know, something else has actually surged about 39% as well. Evan, can you say what that is?
I was going to say, that's really close to international
stuff.
Yeah,
isn't that interesting? Isn't that it? It's about the same, exactly. International, something, and in a part of international markets that almost no investors ever have access to.
Right.
International smaller value companies. It's just, you don't see it ever. But anyway, so a lot of people they're not even aware that it happened because they weren't exposed to it. We, on the other hand, make sure that we're really diversified. It's 40% of our international portfolio, full disclosure. So, you know, it happened. You know, you have that happened. But anyway, so gold about the same amount. But anyway, and you look at international companies and you say, well, that makes sense. It makes sense to own stock because you have a cost of capital. You have companies paying to use your money. They pay in earnings, and you own their assets. And you have there's a lot more as far as diversification. You own land, you own their equipment, you own their buildings, you own their intellectual property and all of the things that go with that. But gold, you own a piece of metal, and the reality of it is, as I've said before, 50% of all the gold ever mined in the history of Earth was mined since 1970. 2/3 of the gold ever mined in the history of Earth was mined since the 1950s. So people that say, well, I like real estate, they ain't making any more of it. Well, you might want to look at gold and say they are making more of it. They're finding more of it. Maybe not making it, but they're finding more of it.
Right.
And at the same token, they're not making any more of Apple. They're not making any more of Nvidia. The reality of it is, when you own stocks, it's the same story as real estate. So anyway, I digress. Investors are flocking to gold and amid economic uncertainty spurred by what? By the Trump administration's policies and trade tensions. Okay. Kenneth Back invested in gold for the first time in April to shield himself from what he saw as the disorder of the new Trump administration. Even after the stock market recovered from Trump's Liberation Day. And there is talk about that. One of the reasons that gold has rallied so much is that there's buying of gold from China because of the trade uncertainties, those issues. So you can make a point that what they're saying makes sense here. Mm-hmm. In reality, it's not just a bunch of blowing smoke. Okay, so even after the stock market recovered, And I'm not being critical by any stretch of the imagination, but I just want you to get that they're not making this stuff up. They're not falsely blaming what has been happening in Washington regarding gold and what has caused it to go up. But it says, even after the stock market recovered from gold's Liberation Day, quote unquote, confusion and rose even higher, investors such as PAC have kept plowing money into the precious metal. The Nevada retiree plans to keep holding precious metals and stocks linked to them, which comprise 17% of his portfolio.
Wow.
Yeah, that's a lot. Modern-day gold rush is stretching from Costco store aisles. People are going in there buying gold. Does that not remind you, Evan, of 1929 and the Patriarch Kennedy? You know, when he's getting his shoe shined.
Yeah, when the shoe shine guy says to whatever, get in or get out, or get it, you buy stock, that's the time to get out. Yeah.
Yeah, well, this guy's talking about shining Kennedy's shoes, and he's hearing this shoe shiner talk about buying stock, and he's going, oh man, that's a real sign that maybe this is a good time to get out of Dodge, right?
But what a country that we can get like a 5-gallon jar of cheese puffs and a couple of ounces of gold at the same trip. I mean, that's what a country.
What a country. But a modern day gold rush stretching from Costco store aisles to underground vaults in London and the flickering screens of Wall Street, old jewelry now glimmers with potential dollar signs. Gold's value has ballooned by 40% this year. And as we said, you know, same return, ironically, as international small value stocks. They didn't say that in an article here, but because they don't ever pay attention to actual, what we call real diversification worldwide. These days, it isn't a financial meltdown that is drawing people to one of the original market refuges. The recent run-up to record places reaching $3,682.20 a troy ounce on Monday instead stems in part from the White House, with investors big and small rushing to shield themselves from the uncertain lookout for the U.S. economy and its role in the world. Now, Evan, the thing that hits me is this. What if things don't turn out as bad? And what if it turns out that Trump isn't as stupid as they seem to predict? What happens to the price of gold if maybe he's crazy like a fox?
Yeah, well, I mean, the short answer is we don't know what would happen to the price going forward. Ultimately,
right?
We could
but
assert
if it's
that it
due
would
to his craziness, and he doesn't turn out to be crazy,
yeah,
you can surmise.
If he, gets the vaccine for crazy, and things do well,
gets the vaccine.
You would expect. You would expect for gold to go back down, yeah. And kind of like what you've said in the past, if and you may be going there next, but if the poop hits the fan, and everything goes down, your bank has collapsed, government bonds have collapsed, your gold is not really going to help. Right. You can't eat it, you can't plant it.
Right.
You're better off having a couple of cases of wine and chocolate bars or something.
Well, you know where I'm going next. Because Livik, he'll be all over me if I don't take a break.
Okay.
Let's take a quick break, and we'll finish this right after this, because there's more on this one. Hey, just a note to you podcast folks, we just came out with a retirement income guide, and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money, and rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement. Real estate, life insurance as a retirement investment, and annuities and interest-bearing accounts and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. What's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax. All right, back here on the Investor Coaching Show, Paul Winkler along with Evan Barnard. So, I was talking about this article. Gold hasn't rallied this much since 1979. It's basically up as much as international small values. So I'm like, oh yeah, whatever. So you haven't missed anything if you're diversified and you own other things. That's probably a really good idea, especially when you look at the history on gold. As I like to point out, what CNBC had to say about the history on gold.
Andrew and Kelly, this is probably simplistic. Gold's return over 4,500 plus years, annualized real return, 0. It preserved wealth but didn't create it. In terms of purchasing power, 1 ounce of gold buys about the same amount of goods in ancient Egypt as it does today.
Yeah, so, just keep that in mind. But anyway, they're saying, why is it that you've had this increase in value why did we have this increase in value in gold? Why did it go up so much? And it says, well, because of President Trump's attempt to reorder global trade has buoyed inflation and scrambled economic forecasts. So that's basically what he's saying here. So they're saying that there has been a rush to shield oneself from these things. Now, the question I asked before the break, I says, what if things don't turn out as bad and it turns out that Trump isn't as dumb as they're seeming to predict? Some of these people are saying that he's been kind of a loose cannon. Isn't it odd, is my question. Isn't it odd that the run-up is due to uncertainty with the current president, but some of the biggest buyers are his supporters? Is that even being considered? I don't know, Evan. What do you? Don't you think that that's interesting? That a lot of the people that are buying are literally the people that are his biggest supporters, but they're saying that the reason it's going up is not because the world's coming to an end, but it's because of his policies.
Well, I think that actually is why a market exists in the first place. And we don't talk about some of just the fundamentals, but everybody is processing information in their own way. Mm-hmm. And the buyers and sellers of Tesla, of Amazon, of Apple, of gold come to some conclusion of what's the direction it's going to be and what's a fair price today to get in or out of that. Mm-hmm. That holding. And so I think that the people that say believe in Trump could either be hedging their bets. I can't get inside their head. They're like, okay, I support him, but in case he's wrong, I've covered my base. Mm-hmm. And, they could just need to add some stuff to whatever guidelines they have for their portfolio.
Well, I don't know. I've had people. I know I had one conversation with one guy, and the reason he added it was back during the Biden administration. He was really scared about where the country was going at that particular point in time.
Yeah.
And that was the reason he did it. It was because he thought everything was going to go the heck in a handbasket because of Biden. And, we stay out of the politics here, but I just like to point out how interesting it is, how behavior is driven. And you think, well, wow, isn't it interesting? It went up, and a lot of people believed it would go up because we were going down a bad path. And now that a lot of these people believe we're going down a better path, it has gone up. And I just think that's ironic more than anything.
Well, and, just thinking about the rest of the data that's out there, not that they're paying attention to it in the article, but, if things were that bad that gold is growing because the world is ending and I've got to protect myself, you wouldn't think U.S. stocks are up 12, international up 30 plus. Sure. All of that stuff is doing well, which is typically a sign of good things ahead.
Right, exactly. And you look at why some of the good things are ahead. There's some more talk to be had about that. But, the fear that caused the gold to rally back in the 1970s, and then, of course, it went crumbling down after that. But the fear are some of the same things that are going right now. They talked a little bit in this article about high inflation concerns. Low or slow growth was another thing. And it was interesting because if we look at the tax laws that were actually passed, what did they say was going to happen to revenue because of the tax laws? They said we were going to have huge debt, huge deficits. as a result of the new tax laws that were passed, because they basically took some of the previous tax laws and they continued them on into the future. And they said, how are we going to pay for this, right?
Right.
And you remember the CBO. With the CBO, the Congressional Budget Office, what they actually said was that we were going to go into these huge debts and huge deficits. And one of the big criticisms about the CBO numbers is what they were based on growth rates that were abysmal, like 1% growth rate in the economy going forward for the next 10 years. And of course, what have we been seeing recently? We've been seeing growth rates in the neighborhood more of like 4%.
Yeah.
So it's been a big, big difference between what they said would happen and what ends up happening. That's the other problem that we end up with. A lot of times we hear all of these really negative things about what's going to happen going forward, and we don't recognize that quite often the numbers that they're throwing out there or they're using to project are not necessarily terribly accurate. And same thing with Reagan. Remember Reagan when he got in 1980? 1982, we were in the midterm elections, and it was a very, very rough time at that point in time. Matter of fact, he almost didn't get reelected. If you looked at the midterm numbers for him, they were pitiful. They were bad. Because people were not liking where the country was going because his new policies weren't acting or they weren't working fast enough.
Right.
And as a result, he almost didn't get reelected in the next election. But things did turn around. And if you look at what he did, he reduced taxes. He looked at a lot of the same things that we're seeing right now. Mm-hmm. But what ended up happening with gold is it dropped like a rock over the next several years. And a lot of people didn't see it coming because they had just been ridden it up and they saw all these positive articles about gold and how great it was and what a wonderful thing it was. And it didn't turn out to be such a great thing. So anyway, and they did point that out to their credit in this article. It says renewed confidence in U.S. growth and the dollar's role as a reserve currency could tarnish the rally. And, it really could be something that ends up turning around in a pretty big hurry. And you just don't know when that's going to happen. So also, the other thing that I thought was interesting in here, the Bitcoin's hottest new trade, get rich or get wiped out with perpetual futures. Huh? People are finding new ways to gamble.
Yeah, I didn't read it, but I saw that article.
Did you see that article?
I didn't read it, though.
Well, I actually pulled up, Evan, this week. Because I'm working on a presentation. Somebody asked me to go teach a little class on this particular topic. But I have this chart, which is really, really interesting. It's looking at recent, I think, 1-2 years. And it is a correlation chart with Bitcoin and the stock market.
Oh, uh-huh.
And it is... when you look at it, it's literally move in lockstep. It is unreal.
Interesting.
The movement between those two things. And, because it was the whole idea, it was going to be a hedge against the stock market risk. It was going to be a hedge against inflation risk. It was supposed to be something that protected us.
Non-correlated.
Yeah, non-correlated. Right. And that has not been what has happened. And now, because people are going, well, it hasn't kind of done much of anything. It's going up and down and back, and it goes up, and then it goes back down again, and it goes back up, and then it goes back down again, and it goes back up, and then it goes back down again. I think what's happening now is people are going, well, we got to find some way to make money on this thing. What do we do? Oh, futures.
Wow.
Yeah. Let's. And the idea behind any kind of options contracts, folks, is that you can magnify gains and losses when it comes to these things. Then they're saying traders seeking rapid returns have made a speculative Bitcoin play on one of the most popular crypto bets globally, so-called perpetual futures. These potentially, quote unquote, offer returns of 10, 20, or even 100 times the initial investment or losses that could leave the trader with nothing. And there is just Wall Street. Hey, you know what? If you want to gamble with your money,
that's right.
If you want to gamble with your money, they will give you away. If you're like, I live too far away from the casino. It's not practical for me to go to a casino. But you want to gamble? You can do it right in your living room.
On your phone in traffic.
Yeah, what was that article? I don't know that I even saved it, Evan, but there was an article about that people doing day trading. Did you see that?
No.
There was a new ruling regarding day trading. I'll find it during. I'll find that during a break, because the new ruling. It used to be that you had to have a certain amount of assets, like $20,000 or something like that, in assets to do day trading.
Blue collar accredited.
But they're allowing you to do it with next to nothing. It used to be that you had to have enough money that maybe the government deemed you able to withstand losses.
Right.
But now they're going, no, we'll let anybody do it.
Interesting.
We'll let anybody do dysfunctional stuff. So anyway, I'll look for that in the middle of the break, and I'll bring it back. But anyway, just no end to the kind of stuff that we see out there. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.